Hello everyone, welcome to the Ichimoku Charts.com daily analysis for gold for Monday, July 1st, 2013. Well, a change of trend today, and the candle we're analysing here is this second last candle on the chart. That final candle there hasn't finished fully developing. But with today's trading, we have seen confirmation of a change of trend, and it has been some time since we've seen this market trending up technically in the first time frame. A candle with a higher high and a higher low today. Now, for the previous day's trading, we had potential, or very strong potential, for a change of trend. We had a bullish pattern, and that's where we had the prior downtrend, a black body candle. A white body candle followed that, and the body of that candle engulfed the body of the previous candle. And the trend with that candle was still down, so we required confirmation. Confirmation was a higher high and a higher low, and that's exactly what we've had today. If we look at the size of this white body, however, it is slightly smaller than the size of the previous white body, and that white body suggests that the buyers have found some solid upside momentum today. They've lost some of that momentum, so it does raise some doubt about continuation of the trend. But looking where the market is closed within the range, we have closed up between the midpoint level and the high, suggesting that the buyers have maintained control of this market as they did with the previous day's trading, and does suggest that the market may trade to high levels. We did see some price rejection from near the previous support area in the recent past around 1266, so there was some price rejection there, but the market did also find support down roughly around that 1218 level, and there is a possibility of those two levels holding as resistance for today's trading, this 1266 level, and now also coinciding with the area that Tenkan-sen is trading at, so that could be very solid resistance, but solid support extending to 1250, 1237.9 and down to the 1218 level. In terms of the Fibonacci extension, we're examining the relationship of the first time frame uptrend to the previous time the market was trending up here, and here we've seen the market trade through the 100% level, through the 161.8% level, and test to above the 261.8% level and being rejected from there. That does suggest that there is some potential for a change of trend, but if we look at the short-term dynamics here, the sellers really aren't strong in this market at all. This picture here is about the buyers, and the buyers have closed with control, but some moderate price rejection from the 261.8% level does suggest that we still do just need to watch that low for a potential lower high and lower low, although there isn't much doubt whether that will occur. And in terms of the Fibonacci retracement here today, we saw the market test to the 38.2% level and be rejected from there without the sellers finding any strength, and it does suggest potential for a change of trend, but not terribly confident about that occurring. Now, in terms of Ichimoku, obviously a bearish market in the big picture terms by trading down below the cloud, and here we see the cloud. The market was trading a fair way away from the cloud, and it didn't surprise to see the buyers come back in, suggesting the market was attempting to find equilibrium, a strong amount of disequilibrium in the market as it was trading down below the cloud, and the extent that it was trading away from the cloud. If we look at this very strong downtrend that the market was in all of that time from the area up around the 1400 level of resistance, we did see only one white candle, and the market wasn't able to change that trend in the first time frame. We have now had a change of sentiment in this market with these two white bodied candles, and there is potential for the market to trade higher. As I've mentioned, the narrowing of the size of this second white body here does suggest that the buyers may be losing some momentum, but still the buyers have maintained control. Looking at the Kijun-sen here, the market's trading down below the Kijun-sen, so we have a bearish market in the medium-term time frame, and that Kijun-sen is pointing flat. And how often do we see this? When the Kijun-sen is flat, we see price action attracted back towards there. So that suggests there is a possibility of this market trading up through the 1266 level, and or at least testing to above there and attempting to find equilibrium in that medium-term time frame. Now, the Kijun-sen is trading around 1300 round number level, and it really does strengthen the amount of resistance that we may expect around that level. So if the buyers are strong enough to trade up through 1266, there should be solid resistance around 1300. The market is also trading down below the Tenkan-sen, the green line here, and that suggests a bearish market in the short-term time frame. The Tenkan-sen has been pointing down very sharply, reflecting the solid downside momentum in this market, and we expect that that will offer itself as very, very solid resistance to this market. So it strengthens the amount of resistance around 1266 and does suggest that there may be potential for that change of trend. But as I've mentioned, very, very solid support down below where the market's trading at the 1250, 1237 level, down to around the 1218 and then down to the round number 1200. Above, as I've already mentioned, solid resistance 1266 and then up to the round number 1300. So the likely scenario here is in line with the bigger picture timeframe trends, which are all down, and the short-term timeframe. We may see the market still attempt to rally up through the 1266. If it does attempt to rally to the 1300 level, we will potentially see the market sell off and trade lower. But the buyers are attempting to find some strength in this market. They are at the moment in control as in terms of this white body candle, but we have seen them lose some momentum, and strong areas of resistance overhead may see some selling come back in.